Hi everyone, in this video I'm going to compare Tesla with Plug Power and answer which one of these two innovative stocks is the best one to buy. Of course, Tesla stock is trying to innovate the energy industry by converting mass numbers of people to electric vehicles from internal combustion engines, and Plug Power is trying to change the way people consume by producing more liquid uh, green energy. So let's look at these two, evaluate their latest quarter's earnings results, and then look at the valuation, and then I'll answer which one of these two innovative growth stocks is the best one to buy. Starting with Tesla, which in its most recent quarter, revenue increased by 24% to 23.3 billion. Earnings per share, however, decreased due to a number of factors, including higher costs paid for raw materials, commodities, higher logistics prices, and Tesla had to lower its prices several times due to rising competition, which is likely to persist for at least the rest of this year. Tesla did reiterate its target to grow 50% compound annual rate and produce 1.8 million cars in 2023. Now, helping that will be the launch of the Cybertruck, which is on track for production in late 2023. Although, with the rising competition, Tesla's prospects look more in question than they've ever been before. Tesla's never had to face this amount of competition, direct competition from EVs. Now, with several legacy car makers launching several EV models and new car makers coming into the market with EV only models, Tesla's facing stiff competition. They've had to lower their prices, and it's hurting Tesla's profit margins even though revenue is growing. Meanwhile, Plug Power revenue increased by 49% to 210 million, although the company's net losses worsened to 207.8 million from 157 million. Plug's liquid green hydrogen plant in Georgia will complete commissioning and ramp production throughout the second quarter. So a lot to look forward to if you're considering Plug stock right now. Plug is looking at the very long term. It's forecasting a $10 trillion total addressable market by the year 2050, but a lot can happen between now and 2050. Plug Power may not even be in business in the year 2050, so that's a long way away from now. The company did lose nearly $300 million in cash in the most recent quarter. They do have a 1.6 billion in cash on the balance sheet, but at the rate that they're losing money, it wouldn't be long until they need to raise more capital to fund their growth initiatives. The company is growing rapidly, and that kind of rapid growth requires a lot of capital to invest, and then you reap the benefits later on down the road. However, the difference between when the investments happen and when you start reaping the rewards makes it an increasingly risky endeavor for investors because of that gap between the investment and the return, and the uncertainty with which those returns will come. Will they be as much as projected, lower, higher? It's unknown, and the unknown is more risky. Finally, I wanted to compare these two stocks on valuation. Looking at Tesla stock, it's trading at a forward price to sales of 4.328. Meanwhile, Plug and Power stock is trading at a forward price to sales of 2.391. So Tesla stock is more expensive than Plug Power stock according to this metric. However, in my opinion, Tesla stock deserves the premium valuation. In other words, I would rather pay the higher price and buy Tesla stock. So right now, if I was deciding between these two stocks to buy, I would buy Tesla stock. I like that it's more proven, it's further along in its business maturity, and I would be more confident in its ability to generate profits and cash flow compared to Plug Power, which has a greater potential in the long run, but for now it's not yet there. It needs a lot more investment and time to capture those results. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.